Hello and welcome to another chart lesson update from Oliver Velez. My name is Oliver Velez, and this session, of course, is sponsored by iFundTraders.com. Let's talk about Qualcomm, symbol QCOM, which is going to be an interesting update because this is a play that has caused a bit of a ruckus last Thursday as it gapped down shortly after we nibbled on the stock when it moved above $42.80 to slightly above $43. Now, this is where we actually took our initial buy, right on that bar there. As you can see, it's evidenced by this circle. All right, the day after, we experienced a downward move back toward the 20-period moving average, only for the stock to gap down on Thursday and continue its downward descent on Friday. Now, gaps to the downside never feel good. However, I'm sorry about that. Gaps to the downside never feel good. However, keep in mind that the key level of price support down here in the mid $35 area is still held. And also keep in mind that the initial buy was only a nibble. Whenever we start to accumulate, we accumulate in what I call one-lotters. We start to add in one lot here and one lot there and one lot there, and then gradually increase to maybe two lots and three lots or what have you. Perhaps maybe even the next buy opportunity brings about a 2 or 3 lot buy opportunity. The stock will have to dictate that. But in the long run, I believe that this gap to the downside is only going to prove to be more profitable and give us an opportunity to accumulate in a price area that I, quite admittedly, wish I had begun accumulating the stock in prior. Note this gap, strong gap to the upside that occurred in the beginning of March. My students know this powerful event as a bull monster gap. I teach this event. Unfortunately, I simply was unavailable and did not avail myself of the opportunity to buy during this period. Well, as fate would have it, Qualcomm is moving back down to that price area, giving me my second opportunity to begin accumulating the shares in a price zone in which I should have begun accumulating the stock in the first place. Now, I want you to understand the process here that'll happen. Let's call for the sake of simplicity, let's say that the initial buy occurred at $43, okay, for a one lotter. Now, your one lot could be 100 shares, your one lot could be 10 shares, your one lot could be 1,000 shares. The zeros at the end of the number one don't matter, okay? It's all relative. Now, let's say you bought your one lotter at 43, as I did, around or thereabouts. If the second lot were to occur in my most ideal zone, let's say $36, right? That's a $7 difference between buy number one and buy number two, right? Now, if those buys are in equal amounts, your average would move from an initial $43 to halfway down, which would be $3.50 up from 36. Do you see how that works? So the initial buy occurs at 43. Let's assume that the second buy occurs at 36, which would drop your average cost between the two buys from 43 initially to 39.5. So your average would settle in here. Now, all Qualcomm has to do is move from 36 to 40 and you're profitable. But let's assume that another buy somewhere in the future occurs down near 36, 37. Your average price would then actually creep even lower. And another buy down there would creep it even lower, making the point at which you're profitable easier to obtain. So what I'm hoping for is for Qualcomm to settle down and to begin showing signs that the institutional buyers have begun to quietly step back into the pond to start their accumulation phase as well. So I will be watching the bars very carefully in Qualcomm over the ensuing weeks to the next several months. I will pay keen attention to strong bottoming tail bars that emerge and strong, powerful green bars that emerge. Gaps to the upside in Qualcomm will be viewed as bullish, and opportunities to add, particularly on pullbacks after the gap up to the upside. And all the bullish signs will be taking, I will be using to take advantage of, while gradually and systematically lowering that average cost. Also, do not forget the fact that the market does not like areas that are uncovered. This gap is an area that's uncovered. Ultimately, Qualcomm will seek to move back into the area in an attempt to cover the spot that has been left as a void. The only question that remains to be answered is, when will that happen? How long do we have? Well, patience is a virtue when you're accumulating sustainable wealth over a long time. So this play will require some patience, but I want all of my followers, all of my wealth, my baby wealth accumulators who watch my actions, I want you to carefully watch how I utilize the events that happen in Qualcomm to masterfully turn this into potentially a much bigger play than it would have been without the gap. You're about to see a true institutional style master at work, and I want you there every step of the way. Until next time.